Palantir stock is the lowest price it's been in over a year. The last time it was $16 per share was in November of 2020. So in this episode, I'm going to answer one simple question. What's going on with Palantir stock, and is it a good buy right now? Wait, that's two questions. To do that, I'm going to talk about some of the ways that Palantir has grown over the year, some of their biggest wins on the government and commercial side, and address some of the biggest recent stories that I've heard around Palantir, like Ross Gerber's spicy comments in a recent interview.
Do you have any thoughts on Palantir?
I do. I think it is literally the worst company in the world.
And more legit concerns about their financial health and stock-based compensation. Your time is valuable, so let's get right into it, starting with what they've accomplished over the year. Their latest earnings report is for Q3 of 2021, and the last time they were this price was in Q3 of 2020, so we can actually just look at their year-over-year numbers. Palantir's total revenue grew by 36% year-over-year to $392 million. Commercial revenue growth has also grown by roughly that amount, which is great to see because one of the biggest complaints I often hear about Palantir as an investment is their reliance on government contracts. Commercial revenue in the US has more than doubled since Q3 of 2020, so they're actually getting a lot of business on the commercial side domestically, which should alleviate at least some of these concerns. The other big complaint about Palantir is that it's enterprise software, so the total addressable market is limited to government agencies with huge budgets and big Fortune 500 type companies. In addition to being a flexible platform which works with everything from cryptocurrencies and pharmaceuticals to robots and race cars, investors want to see that Palantir's Foundry is a scalable platform that can work with companies that have dozens of employees, not just thousands. Their total commercial customer count has gone up by a whopping 135% since the start of last year, and their commercial customer count is growing faster than their average commercial deal value, which tells me that they're landing smaller commercial clients, which means they're starting to move down market to medium-sized businesses. In my opinion, these are positive things that increase their total addressable market, even if this looks like their average size per deal or average size per client is going down in the short term. Palantir's final guidance for 2021 saw revenue grow by 40% and adjusted free cash flow grow by 33%, both year over year. Their long-term outlook is for 30% revenue growth per year for the next 4 years, so through 2025. Alright, so just from their earnings report alone, we can see that Palantir's top line has grown by at least 30% since the last time the stock was $16 per share. Importantly, this doesn't include over a dozen companies that Palantir has made investments in, several of which are no longer SPACs. Palantir also stands a lot of them up on their Foundry platform. For example, Wejo onboards and standardizes over 14 billion unique data points every day from connected vehicles through its cloud platform. It takes in data like vehicle location, speed, environmental data, camera data, and more. And by partnering with automotive manufacturers, Wejo can take in automobile data directly from any vehicles manufactured by a partner brand. Then they can use that data to help make decisions in a wide variety of automotive applications like fleet management, hazard monitoring, training self-driving AI, traffic management, advertising, remote diagnostics, roadside assistance, and even payments. My point is, this is a no-brainer business for Palantir's platforms, which focus on exactly this type of data collection, refinement, and insight generation. Helping businesses build on top of Foundry before they get very big makes Palantir very sticky because if a business builds their entire data pipeline on top of Foundry, it'll be very costly and time-consuming to switch to different software. My point is, Wejo is just one commercial company that Palantir is invested in across a wide variety of verticals, and the growth of those investments should also at least be on our radars as investors. I was actually lucky enough to get Wejo's CEO Richard Barlow on the channel for an interview a few months ago, where he answered some pretty tough questions about connected vehicle data, being a SPAC during tough market conditions like these, and the nature of their relationship with Palantir. If you're interested in learning a lot more about that, I'll leave a link to that exclusive interview with Mr. Barlow in the top right-hand corner of your screen right now, and in the description below as well. Wejo has actually had a ton of awesome news come out about it, so maybe we'll be lucky enough to get a follow-up interview soon. Fingers crossed on that. Another thing that we should be watching out for is joint ventures. Just 2 weeks ago, Palantir and Hyundai Heavy Industries announced a collaboration to build a big data platform for shipbuilding, offshore engineering, energy, and industrial machinery. Once the big data platform is built for HHI and its key affiliates, the two parties plan to create a joint venture that specializes in developing and selling these big data platform services. Hyundai Heavy Industries is working on the future of shipyard, the first smart shipyard in the world. HHI's CEO, Ki-sun Chung, said that they expect that this partnership with Palantir will substantially improve the competitiveness of core businesses to the group and change the way that they work with data. This multi-year deal is worth over $25 million and also uses Palantir's Foundry platform. Investors spend a lot of time focused on Foundry because we all want to see Palantir's commercial business keep ramping up. But I also think it's important to consider their growth on the government side with their Gotham and Apollo platforms. Just last month, the U.S. Army opted to execute the second option year of its partnership with Palantir on the Army Vantage program, now worth over $116 million for the year, meaning the Army likes Palantir enough to stick with them even when they have the contractual option not to. Army Vantage provides a central operating system and an integrated near real-time data platform to help create one global unified picture of everything going on so that the Army can make better decisions at the strategic level. We also know that Palantir was selected for the next phase of the Army's competitive $823 million IDIQ contract. IDIQ stands for Indefinite Delivery, Indefinite Quantity. For that contract, Palantir is going to deploy the Gotham platform to support Army intelligence users worldwide with an analytics platform that spans multiple security classifications. Having one platform that supports a worldwide list of Army users is a very, very difficult challenge because different areas of the Army have different ways of handling their access lists, networks, data, and have a wide variety of analysis tools. You would think that everything that the Army does would be standardized everywhere and work the same way, and that's probably true on paper, but it never works that way in practice. Plugging the U.S. Army's intelligence systems and analytics into Palantir's Gotham will bring this part of the Army a lot closer to having that unified, consistent view of all of their data, which is obviously super important when you're talking about multiple teams stationed around the world. So this $116 million Army Vantage program is another way Palantir is helping strategic leaders make data-driven decisions across a huge, globally distributed enterprise like the U.S. Army. Just 2 weeks before the Army Vantage program renewal, Palantir secured an additional $43 million from an extension of their contract with Space Systems Command, which is now worth over $90 million total. This award provides continued capabilities to enable all-domain situational awareness and decision-making. Back from my government research days, I can tell you that all domain means different layers of intelligence. So think about the sea, land, air, and space, but also think about telescopes and cameras, radars and lidars, and other types of sensors. This version of Palantir's platform is known as Warp Core, and it's being utilized to make decisions from large volumes of data in support of these missions. Another important thing I always try to call out here is how important it is that Palantir supports users who operate in multiple security levels and need to access multiple separate networks. Palantir can do this at least in part because of Apollo, the platform that powers their other platforms. Apollo sits between Palantir's other applications and the underlying infrastructure that they run on, and they spent a good amount of their Q3 2021 earnings call talking about it. Apollo lets Palantir push the right updates to the right clients at the right times, even if those client machines are sitting on classified networks or networks that don't touch the internet at all. I cannot emphasize enough how big of a market Apollo unlocks for Palantir that other software as a service providers simply cannot touch. Apollo is what allows Palantir to be one of just 5 companies authorized for mission-critical national security systems at Impact Level 5. The other 4 companies are Oracle, Microsoft, Project Hosts, and DISA, which is the Defense Information Systems Agency. So this is a tiny list. Think about how sticky that makes Palantir on the government side as well. If these parts of the US Army or Space System Command decide that they want to try a new platform, imagine all the infrastructure and software they'll have to change just to do it, just like the smaller commercial companies using Foundry. I know I've covered this stickiness several times now, but these recent contract extensions are clear examples of it in action. At the same time, they're launching new offerings like Foundry for Crypto. If Foundry can work on everything from cars to crypto, I'm hard-pressed to find a vertical that they can't make money from. This gives Palantir a huge total addressable market. They've also recently launched a new certification program which will help Palantir's customers unlock even more value from Foundry regardless of what kind of business they run or at what size. There are already 4 Foundry exams and certifications available to existing Palantir customers: data engineer, application developer, data science, and data analyst. Certifications are the exact kind of validation that employers look for when hiring new talent. Amazon and Microsoft offer dozens upon dozens of certifications today, and it makes total sense for Palantir to start offering them now and expanding these programs into the future. Okay, now let me cover some of the bear arguments against Palantir. Just to give you a balanced point of view, I'm trying to provide value on both sides of the story here. I think there are 2 kinds of bear arguments against Palantir. The first kind is the bad kind. It's based on not understanding the actual company at a fundamental level. Here's a quick example.
About Palantir, do you have any thoughts on Palantir?
I do. I think it is literally the worst company in the world, like ethically. So like ESG, I have my own ESG rules. You know, everybody can make what they call morality up. I don't really believe in religious morality, for example. So I invest in cannabis. I invest in gambling. I don't listen to people telling me what's moral or not. Okay. But I have certain moralities like tracking everything Americans do and selling that to the highest bidder, even if they're enemies of America. Now, Palantir and the president of Palantir is basically the for-profit CIA. That's what Palantir is. So over the last 10 years, and it was kind of founded through the Mercer family and the whole misinformation campaigns that brought Trump into power. So Palantir's roots are in tracking all of our digital histories, making profiles. So they have a profile on every American. So they have your profile and everything you do, and they track everything you do digitally, and they do it through nefarious means. And then they take these things and they sell them to companies and governments and foreign spying institutions. And there are no ethical boundaries at Palantir who they will and won't sell information to. So to me, they make Facebook, which I hate, look like Boy Scouts, you know? So like, why would you want to be a shareholder of a bunch of shady CIA dudes who are cashing out on you, who don't give a about you at all, you know?
Comment below or tweet me at tickersymbolu if you saw that interview before Ross Gerber made Dave Lee edit that clip out. What did you think about Ross Gerber's overall thoughts on Palantir? I read all of my comments, and I'm really excited to hear your thoughts. If you didn't watch that interview, that was Ross Gerber, the co-founder and CEO of Gerber Kawasaki. Ross is a fun guy to listen to in general, but he's super wrong on what Palantir is, what they do, and who they do it for specifically. That's the bad kind of bear thesis. Palantir is not a for-profit CIA, and they don't track individuals, and they don't sell your data to governments or foreign spies. They look at tons of data to find patterns, build models, and then find those rare instances when something doesn't fit the pattern. A car going the wrong way down a highway, a financial transaction that looks like it could be fraudulent, a radar or camera return that looks very unusual. That's one thing that all of the businesses that work with Palantir have in common. They have lots of data that they want to see at once, and they want to know when something is off. Runaway cars, fraud, faulty sensors, and so on. You can't have a solid bear thesis on a company if you don't actually understand what that company does, even if you're running a billion-dollar fund like Ross Gerber. His firm runs the Gerber Kawasaki ETF, ticker symbol GK, which is another fund that I've started to track. He says in that clip that he hates Facebook, but his fund contains over $4 million of that stock, and Facebook is his 36th biggest position overall. Want to hear something even more funny? I looked through the first few pages of the Gerber Kawasaki's holdings on Whale Wisdom, and it holds ARKK, ARKF, ARKG, and ARKW inside it, relatively towards the top. So these are pretty big positions. Those are ARK Invest's 4 biggest funds, and Palantir is in all of them. Ross Gerber, if you're watching this, I'd love to have you on this channel to talk about your thoughts on Palantir, Facebook, artificial intelligence, big data, and privacy. I think it would be a good time. Okay, that's the bad kind of bear thesis on any company. The reason we as investors should still care about them is they can drive the narrative on a stock until the market realizes this mistake. Think about how misinformed people were for years on Tesla stock and what happened to its stock price during that time period. The other kind of bear thesis is what I think is the good one. Unlike Ross Gerber's bear thesis, these are facts based on reality with data that people can point to. It's the kind of thesis that uses that same data to come to a different conclusion. The government makes up a sizable chunk of Palantir's revenue. Palantir's revenue is risky because they rely too much on their biggest clients. Their stock-based compensation is off the charts. I've spent a lot of time covering these points because they're the ones that I'm watching out for right now as a Palantir investor. So, let me wrap up this episode by saving you a ton of time and giving you my answers to these worries right now. Palantir's commercial revenue growth was 37% year over year compared to their government revenue growth of 34% over the same time frame. So their government revenue is slowly becoming a smaller portion of their overall revenue. That's actually also faster than the growth of their average revenue for their top 20 customers. So they're slowly relying less on their biggest clients over time. Last quarter, they added more net new customers than the previous 2 quarters combined, meaning their total customer pool is becoming big enough where losing 1 or 2 huge customers won't be a complete showstopper. That's what we want to see. Stock-based compensation is down about 40%. For just quarter 3, it's down from $847 million in 2020 to $185 million same time in 2021. That's about an 80% drop. Compensating employees with stock is a great way to keep their incentives aligned with their shareholders and to keep them motivated to perform. So we don't ever want to see this number hit 0, but it's great to see that it's much lower than before. That's the nutshell, but if you want more detailed information on what Palantir does, how it's growing, and what investment risks to watch out for, I got you covered. I've put all of my Palantir content in one convenient playlist for you. I'll leave that in the top right-hand corner of your screen right now, and in the description below as well. Hopefully this episode helped you understand just some of the ways that Palantir has grown over the last year, since the last time that its stock was this exact price. Huge wins on the government side, commercial side, new joint ventures and certification programs, and investments into other companies. And hopefully it also addressed some of the biggest worries about Palantir that I'm seeing out there right now, ranging from Ross Gerber's commentary to more legit concerns about their financial health and insider selling. If it did, let me know by investing in the like button and subscribing to the channel with all notifications turned on. That way you'll be the first to know when I come out with new deep dives, regardless of what Palantir tells YouTube to show you. So, stay long, stay strong, and thanks for watching. Until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.